Awesome. I appreciate you joining in. While I'm getting this tweet out and making sure that everything is live, I would love if you can give us a little bit of an intro about everything you do with Wedbush and all the Tesla and tech and Apple talk and just a good intro so we can get started.
Yeah, look, I've been covering tech for, I guess I'm going my 22nd year, Wall Street. And, been at Wedbush about 4.5 years. And look, I mean, my reputation has really been hand holding institutional investors going back to dot-com bubble and burst through the highs and lows, right? I mean, I think what we're known for on the institutional side is just going against the grain, doing a lot of work, sticking to our thesis. And, obviously a lot of times in downturns, that's not easy. but but that's who we are, right? And we're pretty like open book. So, I'll take I'll take, you know, I'll take blame when we're wrong and I don't hide. Because if I have a thesis, ultimately I'm gonna stick to it until something changes in the thesis. And I think that's sort of been our DNA in terms of as we've covered tech over the decades and sort of what we're known for, at least from a client perspective.
Awesome, Dan. I really do appreciate that. And if you really do follow the Tesla space or the stock space in general, you obviously have heard Dan Ives and heard of Wedbush before. They're putting out a lot of reports, and it's covered by a lot of people. But enough with the intros. Actually, one more thing: if you do enjoy the space, make sure you're following Dan's account. I've actually seen your Twitter account pumping out a lot of content recently, so people should go in and check that out as well if you enjoy the spaces. But I do want to get us started right here, Dan. I do know the majority of this is probably going to end up being on
Sure.
Tesla. So I want to take the
And that's
chance
the
here to
goal. And
maybe
also,
start
look,
us.
the goal of this, I want it to be interactive and, good, bad, haters, lover, whatever it is, just because to get it out there, especially on the Tesla story, because look, I mean, personally, I've covered 75, 80 public companies in my time. It's it's been one of the more frustrating periods of time because on one hand, my view of Tesla is it's one along with Apple call it top three, if not the most transformational company probably over the next decade. And once the Twitter stuff started, it's almost like the worst fears have started to take place. It's like self fulfilling. And I think a lot of times like on Twitter, and I love hearing good and bad, right? People be like, "Ah, dude, you're looking at too short term. You gotta look at long term." Look, I talk to institutional investors every day, all day. So if I have a pretty good pulse as to, at least in my opinion, like what's driving things, what people like, what they don't like, where they're getting frustrated. And like I've said, I think like a big part of the sell off and kind of what broke the dam, kind of like in terms of the stock, was really the Twitter slash Musk slash selling stock slash, call it political firestorm stuff to brand damage and that. And it could be corrected, but that's why I've been so vocal about it because I'm such a believer in the story.
Awesome. And I do look back to this list of 10 things that you put out for Elon Musk and Tesla slash Twitter to do in 2023. I do want to talk on a lot of them, but I did see a little note or article this morning from Seeking Alpha, but it was quoting a report that you sent out to investors today, or maybe not investors. I should get that correct. But it's basically saying that technology is an overlooked sector in 2023 amid macro uncertainties. And we've definitely seen that a lot on these spaces. A lot of people are worried going away from tech in 2023. I wanted to hear if you had slightly a
Look,
different opinion on that.
in 2001, I was speaking at a conference in Silicon Valley, and everyone's like, "This is it. It's over. Like, this is the end of tech coming post bubble." And then ultimately, that really gave birth to the next cycle, especially on the enterprise in terms of cloud, social media, digital. In '09, a similar type thing, being in Sand Hill Road, and couldn't have ever been more negative, right, in terms of financial collapse. And in terms of the view of tech, Apple's going to be the next BlackBerry. It's over. Microsoft's going to $10. So I'm just saying, like, my experience is from historical that I've been through in terms of ups and downs. And I would compare today similar to how I felt in '01 and '09 in terms of how under-owned tech is, in terms of no confidence where any multiples are. Now, again, anyone thinking, anyone listening, they're like, oh, well, tech's never operated in an environment where there's no free money. That's actually wrong. Go back to like '05, '06, '07. Like, so the point is, like, I just disagree with some of those comments. And my view is just most of the growth of tech is ahead of us, not behind. So that's why I'm not one that's going to sit here and yell fire in a crowded theater, given my view of where I see growth and what a lot of these stocks are baking in, as painful as the last year has been for bulls, including ourselves.
Awesome. I appreciate that. Wolf, I see you got your hand up.
Yeah, just kind of wanted to dig a little bit further into that point of
Sure.
the no free money because you had that experience, right, of seeing those early 2000s, and that was before I was personally investing.
Yep.
And I'm kind of curious, a lot of people look at it and say, hey, this was just a crazy catalyst environment from 2020 till 2022, where, or even, a little bit before 2022, where that run up was, 0% interest rates combined stimulus payments combined with I think that there was a real surge towards this idea of clean energy, hybrids, EVs, things like that, and it seemed to create kind of that perfect picture. And it doesn't seem on the other side of it like we're going to have lowered rates for a while here. I don't know. Maybe we could talk about your
Sure.
thoughts on a potential pivot, but with those interest rates remaining high, with no additional stimulus potentially coming in, with competition arising, how do you go about saying, this is just the start
Sure.
for the growth and that ahead
And
of
just
us?
even going back to that, like, I remember in '01, '02, like, it was the mid '90s. That was it. That 5, 7 year cycle, that was the growth. Now it's over. Now it wasn't necessarily the free money, but it was like that. If you go back to like the Netscape, Microsoft Internet, like, guys, go back to like that period, '96, '97, '98. So I'm just saying, like, it, like, look, part of it is like you could argue multiples all day long. You could argue technicals all day long, but I just view it like this: 45% of workloads are in the cloud today. That's going to 70 to 80%. Now, you could argue it gets there in 25, 26. It's going to get delayed because of the macro, but that's where it's going. It's hard to argue that concept. EVs are 2.5% of US automotive. If you think that that's just going to stay, I mean, I don't know. Like, when the biggest US auto manufacturers are all going EV, like, I believe that goes to 10% by 25 and 20% by 2030. When I look at AI, and especially even some of the stuff that we're seeing on the chip side or software CES, we're still in the early days. You look at cybersecurity, you're still in just the infancy in terms of mobile proliferation. So my view is predicated on where I view overall growth in tech going over the next 5, 10 years. Now, to the Fed, look, I get bears, many that I talk to, super smart. They were dead wrong for 12 years. I get it. Last year, they killed it. They could not have been more right. But my view is that just like the broader trend of tech, this is not the end. It's just a painful transition, especially in terms of multiples and what we're seeing growth. You're going to see a lot of band-aids ripped off. But my view is that once we get through the earnings season at the end of the quarter and companies take their medicine, and a lot of these stocks are on their own and shorts are pressing them left and right, I believe that sets up for our view that 23 tech stocks are going to be up, like we said, overall 20%.
I think I want to hit on that 20% number and just talk about, what is normal growth here for a second, because, we talked about how after that 2001 bubble, there was opportunity, but for some of these mega cap stocks, like I think Microsoft took them 16 years to get back above those levels. And, that's not to say that they weren't having growth during that time. But when you look at Tesla and you look at what happened in 2021 specifically, I think that you could look that is a massive bubble, right? To say that something that should have gone 1,000% or whatever ended up going several 100%. That's a pretty crazy run there. So what is
Yeah.
normal? What is that supposed
No,
to look
no,
like?
but to that point, I would argue like Microsoft was in a non-growth cycle post Windows, where cloud wasn't even on the radar until really Nadella brought. I mean, if you go back to like Gates and even Bomber, I mean, Bomber was focused on buying Nokia and building it out. It was really Nadella that changed everything. So, like, I don't think you could just view it as like how long it took to get here. I view it as like what's the growth that these companies now have the opportunity. So if I look back, Microsoft maybe had opportunity of 700-800 billion. Whereas today, the opportunity set in terms of the potential growth, it's in the trillions, not billions. If I look out over the next 8-10 years, it's exponential. And that's my view. Now you could sit here and argue what multiple do you pay on these names in a non-money's free environment. Okay, so that would be the big debate. And then I could argue what's normalized growth is in this macro, are is this normalized? No. Was it normalized during COVID? No. So what's on the other side? What's a normalized growth rate for a lot of these companies in a Fed not hiking 50 to 75 bips at every meeting?
So also bring it back to very like Tesla specific here. I believe that recently you lowered your price target on Tesla. Would you be able to just cover kind of your price
Sure.
target and what the fundamental background is to that?
Yeah, and look, I mean, first up, like I think you have to, like a lot of times, like with price targets, you get a lot of questions. It's not from just retail, it's institutional as well. It's like what's changed? Well, first of all, as the environment changes, multiples change. Like so that's something that it's obviously impacted across the market, but especially tech companies. And I've always viewed Tesla treated as a disruptive tech player. So part of it is multiple driven. Look, the other part, like we've said, like demand, and we obviously saw with deliveries, like you've started to see it soften a bit. Again, it's still 40% growth in this macro, which is still phenomenal. But as deliveries, where all of a sudden you thought maybe 2.1, 2.2 million, and now it's closer, I think we're in 1.8 million. Like you got to lower the target to reflect that.
If I could jump in here and switch us around a little bit, keep us on that Tesla topic. As we are talking here, it just came out from the Wall Street Journal that OpenAI is in talks for a tender offer that would value them around $29 billion. They're just kind of using that for the intro, but how do you feel and what do you think about FSD and Tesla AI, and maybe even Optimus? That one might be a little bit more out there, but FSD in general, is that something that you really get excited about? Is that something you think could be maybe a call option for the future? We kind of have to see, or how are you looking
I
at
get
FSD at
I get
Tesla?
super excited. I think it's a key part of the future growth of Tesla. The difference is that now obviously like you have big bulls like Barron or Kathy and others that maybe will factor that into their valuation. We don't factor that into our valuation. So I wouldn't say there's a call option, but I view it as it is a key important part of the story in terms of the future, in terms of the next 5, 7, 10 years. And I think part of the frustration that's happened with Tesla is that look, it's always a misunderstood company. And I just think the company now just needs to purely continue to execute like they have been. But also, like when you look at FSD and you look at AI and you look at things like Cybertruck that, ideally will hit second half of 2023, like, look, those are extremely important to confidence in the name and hitting timetables. Because I think that always gives the bear it always gives the bears something to chew on when they miss targets or they have different sort of black eye moments. Look, and that happens to any company that is building out transformational technology. I mean, to some extent, like I could go back to Apple in like '06, '07. I mean, there was just to compare. Like, do you know how much skepticism there was coming at like iPhone? This one, okay, this is not going to be a big, yeah, okay, this is probably a 1 year event, maybe a 2 year. This is the next BlackBerry. And look, and then obviously Apple is probably one of the most historical success stories in business, period. So I'm just saying I think as you're going through it, it's easy to nitpick, but you do have to view forest through the trees, which is why, obviously, like we're always, what I view is like Tesla, I've always viewed as like one of the more transformational names out there that's changed the auto industry. And I think it's changed disruptive tech. I think it's changed the way a lot of companies, ultimately operate. I mean, even automotive, right? In terms of a lot of executives you talk to, I mean, Tesla definitely changed the industry. Now the big issue is that, competition's increasing, the multiples come off, and Musk is a key part of the Tesla story. And that's why it's our view that, like, right, even when Twitter started, it was going to be in the near term just a distraction. That's really what it's become. Not necessarily it's saying a distraction for Musk per se, but perception is reality in terms of the stock. And that's the underlying sort of thesis that unfortunately is sort of played out for the Bears.
Yeah, I definitely agree. We're going to want to dig into some of that Elon stuff, and I saw you making some comments. But just to pull back once more, what is your current price target on Tesla?
Yeah, so if when I think you almost have to look at it like a base case, a bull case, and in terms of like what I view like sort of in this market. I view Tesla right now in terms of like a base case, let's call it 175. And that's our base case price target. I think a big part, $60 to $70, in my opinion, has been Musk Twitter overhang driven at a minimum. So I just believe this is one where a lot of the weakness reflected has been non-fundamental in terms of the Tesla story.
Can
So, what's your view, Dan, on um, China demand? Because I know you've spoken about it
Yep.
briefly, and there have been some concerns. Gary Black is someone we talk to pretty
Yeah,
regularly.
Garrett's awesome. Yeah.
Yeah, Gary's awesome, and I've followed your research for quite some time as well. I've been a Tesla investor for a while, and I've always liked your takes. But I'm curious to hear what you think on China demand. It's starting to become a growing concern. I have a little bit of a different lens view on it, but I'm just curious to see what you think and how short term of a headwind do you view that as?
I view it more short term in terms of it's a hyper growth market that's going through obviously a macro issues, competition's increasing. You're seeing price cuts, inventory. You've seen from Tesla, Neo, BYD. I mean, obviously a lot of domestic players, but I don't. I just view it as sort of the third, fourth inning of the EV story playing out in China. Like my view is, it's not the eighth. This is not it. I just view it as it's transitionary and it's the market going from what I'll call hyper growth to just more, stronger growth above the mean, but definitely going through macro issues. I view it as a near term issue, but it speaks to why you got now the gigafactory that will be a capacity of what, 1 million units per year. And if your view, which is mine, that like over the course there's a company that could be doing, we're not talking about hundreds of thousands and millions of units per year. China is going to be a key part of that from both production and delivery perspective.
Yeah, I mean, I agree with you from that perspective. I think the macro headwinds, have to be obviously the main driver of the stock. I also agree with you on the notion that some of the selling had to do with Twitter. But when we look at the Chinese market competitively here, do you think that it really is necessary for Tesla to move towards a lower cost model, or do you think they can compete with their existing lineup? And what I would also say is, if they do fail, and again hypothetically, to gain the level of market share that they need to in China, do you think they can make up for that in other markets? And again, that's my view as well, that they can. There are plenty of automobile markets that are doing over 1 million cars a year. China and the United States, I feel like being the behemoth markets with 20 to 25 million cars sold in China and 14 to 18 million cars sold in the United States every year. They dwarf other countries by such a margin that it feels like sometimes the auto conversation gets centered, in a vacuum around China and the United States when there are plenty of countries that are selling over 1 million
Yeah,
vehicles.
look, I think look, you raise great points, and like that's like this. What you hit on is like a big debate that I talk to like a lot of investors on, because on one hand it's viewed as like, look, is Tesla going to be a company that's going to max out at 2.5, 3 million units over the next 4 and then flatline to low double digits, high single digit growth, or is this one that could be doing
I mean,
the
Dan, but look,
10?
the backdrop of auto sales tells us that's probably, I mean, barring something crazy happening, an impossibility, right? I mean,
Yeah,
U.S. auto sales were
totally.
down 8% year over year, right? And
To,
Teslas were up
to, to,
40%.
Totally. So I feel like what's happening is there's a changing view. I felt like for a long time it's viewed as like the only way that they could go like this story could take the next leg of growth is if it's a sub 30K vehicle, right? Like based on battery technology and based on scale. I do think that narrative is changing, just given potentially what they can go after in China, what they can go after in the US. And just if you look at what's happened in terms of just cost of the supply chains, the last thing investors want to see is like, okay, go after a sub 30K unit at the expense of what? Margins? Like I'm saying that's the problem. Because if you go down that rabbit hole, there's potential margin implications. And I think right now, like the biggest worry around Tesla fundamentally is just being like, forget just inventory. What's the run rate? Is it 1.7? Is it 1.9? The biggest worry is just what does it mean for margins going, what it means for margins going into the next year, 2 years, 3 years. I think that's probably the biggest quote unquote fundamental debate on the stock.
So, Dan, you don't think that they can find an equilibrium between volume and margin? I
Oh,
mean,
I
even
think
if
they
they
can.
were to eat.
No, I think they can. That's why I'm saying I think the debates changed to that they would not be able to do it, and now they actually can.
So, JP jumped up here. I know JP had two pretty specific questions, one on China, and the other, I forgot what the other one was on, but JP, go for it. If you wanted to ask Dan those questions, I'm sure he can chime in.
Sure. Appreciate this, guys. Just one thing before I start to note, GM's average sale price was like 52,000 in Q3. So I think there is a chance for equilibrium on the forward.
Yeah.
Okay, so two things that are not really being talked about that I'd love to get your view on. So on the China side, everyone's harping on demand, but nobody's really talking about the impact of COVID. And Tesla's sales are extremely concentrated to tier one and tier two cities. 70% of them over the last 4 years come from tier one and tier two, and then about 24% come from tier three. Beijing is really the only city, it was the first city to kind of.
JP, before you go on, if you want to just clarify for the audience the difference between tier one, tier two, and tier three cities.
Sure. So China ranks their cities based on GDP contribution and number of households and what their economic impact is. So the biggest cities that have the most economic power and most spending power are ranked one and two. So one is like Beijing, Shanghai, Wuhan is a new tier one city, etc. But Tesla's super concentrated on the super dense populated super cities in China. COVID has been reeling through those two city or those two tiers basically since zero COVID ended the policy in China, and they've been hit the most. I've spoken to some very senior officials at Chinese banks, and the death toll is massive. A lot of people in Beijing is semi-recovered, but most are just going to work if they're negative and then going home. There's not a lot of restaurant or shopping activity. Shanghai and the rest of the tier one and tier two cities are kind of peaking now with max cases, and it's just starting to hit tier three, four, and five cities. And for comp, from a competitive landscape perspective, BYD is much more evenly distributed. They sell cheaper cars, mostly hybrids, but they're about 20% per tier, where Tesla's uber concentrated in the bigger density populations. So I think there's a chance that the demand concern is really more COVID related, and we're not discussing that impact. And it's
Mm-hmm.
just kind of conflating coincidences on the bear side. And they're using it to drive a theme for like a technical short here, but we really won't know until like kind of after Lunar New Year. And just curious to see if you think that's one of the possibilities for the demand.
Look, I think, and you could argue like with Apple and other, and there's arguments on the chip side too that like that plays a role. I do think that we're clearly seeing a softening of the Chinese consumer. Now, really, the big debate and the big question is, okay, like what, like just take everything equal. What does that ultimately mean? Like, what's the run rate of what Chinese deliveries could be for Tesla? And I think that's really going into, as we go into earnings and we go into the next few quarters, I think that's really going to be what's key to driving the stock, because China plays such a key role, obviously on the production side, but from a delivery perspective. And I think that's really getting some guidance. I think the more granular that they could be, which is always tough, right? But the more granular they could be around deliveries and delivery guidance, and even some just commentary regionally when we think about, global, just when you think US, Europe, and obviously China, would be very helpful to the street, because I think by having less details and less clarity and less granularity, it actually adds more noise to the story. It creates variability in numbers, and it creates more. I think it creates more tough to. No, I wouldn't say tough to defend, but theses of the bears that are hard to disprove by having less details.
I couldn't agree more. I think part of the Twitter noise is that it's distracted Musk and the Tesla brand from communicating some of the milestones. And I want to move on to the second question, but like one of the things that
Sure.
happened in September, which kind of got lost because of the Twitter deal, was Shanghai. So Shanghai's run rate is confirmed about 3,000 a day. They had
Yes.
to they had
Mm-hmm.
to
Yeah.
they had to
Mm-hmm.
file in a government approval to
Yeah.
test from September 19th to November 30th to increase based on the environmental impact. So they did this test period to go above 3,000 a day, which is rumored to be up to 5,000, definitely north of four. But like the point is, like, if there was weakening demand, why would they be testing to go from a 1.1 to 1.2 million to try to get up to 1.8?
No doubt, and that's the ultimate, the driving thesis, in that like they see the demand, and they have a much better perspective than basically any of
Yep.
us. So look, and I think, and when I start off, when I say like the reason it's been so frustrating in the story is that, let's say like if I'm bullish on Apple and they miss deliveries because of China COVID lockdown issues, supply issues coming out, because of holiday season, it's frustrating. But ultimately, like, first of all, it's a supply issue. But the point is, like, there's nothing non-fundamental about
Yeah,
that.
it's technical. Yeah, it's short term.
It's technical. It's now again, if you're a bear, you can be like, oh, this is just the start. Remember, it could have fueled all different arguments. What's been so frustrating about the last 6 months, and especially the last 3 months, is that it's such a tenuous time on the street
Yep.
in terms of just, I'm not telling you anything everyone doesn't know, but it's like Fed, the risk assets, any data point that. So it's like, as an institutional investor, if you just have one reason to sell a stock, you just don't. That could ultimately be the straw that broke the camel's back.
Yep.
And that's been the concept that's so frustrating, because it's tainted in the near term, not long term, the story in the eyes of institutional investors. Now, I'll hear all the time, like on Twitter, be like, "You're looking too short term." Look, I'm just I'm the biggest supporter. I'm just telling you, people that I talk to every day, what they talk about as the frustration. And that's why when I vocalize it, I'm not doing it because I'm negative. I'm doing it because if you're a believer in the story, you want this noise to clear.
Yep.
Dan, I think a lot of the people, the retail investors that maybe aren't as um, market literate, let's say, as yourself or even some of us up here, who struggle to understand stock price performance relative to the market, just want to point blame. And I think the broader issue for me here with the Tesla story is the lens that's being put on the conversation. I mean, we're talking about an auto company that just hit 40% growth, and we have this
In a
50%
recessionary environment.
arbitrary.
In a recessionary environment.
Yeah,
Yeah.
exactly. Hit 40% growth in an environment where the entire auto industry was down 8% year over
Yep.
year. So okay, that's point one. But I mean, it really feels like this 50% target. And I asked, we hosted Elon a few weeks ago, and I asked him specifically about this 50% target kind of being an arbitrary benchmark, and he was like, yeah, like it kind of is.
I know.
And I feel like it's just put unfair
Uh,
pressure
it does,
on the
definitely.
stock, to be like, hey, you got to hit. If you hit 49%, oh, it was a
But
down year. It's like,
okay,
we
but
had a
to that,
recession,
no,
right?
exactly. And to that, to your point, because you bring up a great point. Okay. So many times, like, management teams, my pet peeve is when they have an analyst day and they give some like 3-year number about where they want to hit revenue in 2025. Because that's it. Like, you've now put a bogey out there, wrongly or rightly, that you're going to be held against. If you don't hit that, it's a negative. And then you're constantly trying to answer questions about, but you're the one that put it out there. That's what's so frustrating. So it's
But,
like,
but Dan, isn't
yeah.
it frustrating that they said like average annualized growth, and it's like now everyone wants them to hit 50% every year? It's just like, you know what I mean?
Oh yeah, look, that's why, like,
Oh, my mistake.
Yeah,
Sorry, Dan, you can unmute.
no, that's why going into earnings, they have to clarify that. Like, just be like, that's a longer term target, and just give some more realistic numbers and granularity around what you can hit. Because the problem is, then all of a sudden, street numbers start to go toward that, and then every quarter they've come down. and that becomes like a death by 1,000 cuts, right? Like, in other words, like, that's the worst thing that could ever happen to a stock.
Do you guys mind if I ask the second question now?
You know what?
Let's go to Tesla first. Yeah, Tesla owners first, and then we'll come back to you, JP.
Yeah, definitely. I'm not Tesla. I want to clarify that. But no, I wanted to speak to what Dan was saying. I think, being in the finance world and tech, personally, I think that's where probably I think the miss was in the Q3 earnings. Obviously, unless they didn't know about potentially the China headwinds and some of the other stuff, they still guided to, hey, we'll be kind of close to 50%. And again, that's an arbitrary number, whether that's 45% or 44%. The problem was if they knew at that point, and maybe they didn't, and so that's why I'm excited to hear what in earnings for them to explain kind of like why it came in lower, because that was their opportunity to guide to where they think is more realistic rather than continue to push this 50% number. Despite, again, this like crazy, like you guys were talking about it, the market for US sales for cars is down 8%, and yet they're growing at 40%.
Yep.
And so now everyone, and for me, people are, especially a lot of the retail investors, and there's been a ton of noise in the Tesla Twitter community over the past 4 months. It's been pretty unreal, to be honest. But the biggest thing is that everyone, like, everyone's like, they won't what's the word? They won't admit to a miss.
Yeah,
A
no,
miss is a
that's no.
miss.
I
A
agree.
number is a
A miss
number,
is a
right?
miss. A miss is a miss.
Exactly.
Exactly. Yes.
So it's like, it's one of those things. I'm one of the biggest advocates and fans of what Tesla's doing, what they're doing during a recession, hitting 40%. That number alone is insane. When everyone else is going down 8%, it's still a growth stock in my mind. They're still going to be continuing to do well. But the reality is you have to guide to things that you can hit. You beat and raise. That is the way things should be going, not miss and then like come back later or something. You know what I mean?
But even to your point, listen to Nadella do a call at Microsoft, Cook, Lisa Su. The granularity, whether they miss or beat, is unmatched. They're tacticians. And that, now remember, someone on here would be like, oh, it doesn't matter. That's short term. Look, it wasn't, I mean, like, I'm just telling you, like, this is the market the last 100 years. You have to be granular on both sides because that ultimately helps investors and creates.
You know what's interesting? As we're talking here, I guess the Mobileye CEO is currently speaking at CES. They
Yeah.
just said that they expect super. Ooh, did I just cut you off? I'm sorry, I didn't hear you going there. But yeah, Mobileye CEO said the supervision product contributes $3.5 billion to its outlook, and that
I'd
the CEO said,
also
"Yeah, go."
add, I think this upcoming earnings is going to be just incrementally important to just set a tone and give some annual target. Just give some. Look, it could be a range. Give a range for the year what they believe delivers could be. And it could be a wide range, but just give that. That's my view.
I think I agree with you guys on this. Like the idea that Tesla should be forecasting accurately, and that beats and misses are part of markets. I agree with that notion. But here's the thing: we did not know. Like, okay, coming into this year, most people knew the Fed was going to raise rates. We didn't know how sticky inflation would be. We didn't know about the energy situation in Europe. We didn't know that the war in Russia, Ukraine would happen. So things did change since that statement was made, right? And so we have to be fair to the extent to say, look, this company still hit 40% growth in one of the most difficult years economically in a very long time. And most companies were doing mass layoffs, slashing estimates, not even coming remotely close to growing at that pace. I mean, name another 5, 6, $700 billion company. Well, at that time, now it isn't, but that was growing at that rate. I mean, there just wasn't, right? And there isn't, and that's why it trades where it trades. So I just think the way that, and putting the Wall Street estimates and the market performance aside, I'm saying the critics of the stock, or of the company, I should say, because they're not really critics of the stock, they're critics of the company. The critics of the company who are like, hey, the Tesla growth story is over. I mean, the absurdity in that just blows
But
my
that's
mind, right?
ridiculous. Remember that, but that goes back to people would say Apple is the next BlackBerry in 2009. Like the point is, the haters are always going to be there. And the point is, no one you're talking about a company that's growing 40% where everyone else is basically declining. But I couldn't agree more. But again, it goes back to like held to a higher standard. If some director that no one's ever heard of does a movie, no one cares. If it's Spielberg, if it's Quentin Tarantino, there's a focus, right? Like in other words, it's held to a higher standard given their hit, and that's essentially the deal with Musk and Tesla for good, now for bad. But it goes back to like you got to give more granularity. In my opinion, it just helps the story.
Dan, on that note, I
Oh no,
think
so just have like I gotta go in like I got like this investor
all right,
call.
this will be the fastest one possible.
Sure.
Twitter sucked up so much information and time of everyone. What's gone under the radar is the Goldman Sachs institutional tour of the Lathrop facility in September, where Martin Vecchia took a bunch of investors and Goldman Sachs people around and confirmed the 40 gigawatt hours for 2023 out of the Megapack facility. And this is largely viewed as a zero or a negative on every analyst's
Yep.
forecast. We did this conversation. I did this exact conversation with Gary Black about a week ago. He is now on board because he sees it. Myself and another Twitter handle, 07game33, have been exchanging like fundamentals on Megapack for like the last few weeks, if not months. And people are starting to come around to it.
Oh,
when do you think you're going to factor this into your model?
Look, I think that's why as you go into 23 and 24, it starts to play a role. It starts to get factored in. But I do not believe that is something that's factored in along with FSD and a lot of into the stock here, which is why Tesla's one of our top picks at the risk reward. And as brutal as the sell off's been, I think we sit here a year, 2 years from now and be like, this was much more of an opportunity than the time to, just yell fire into a crowd theater.
Yeah, we see it like the math shakes out to somewhere between like $1 and $3 EPS for 23, and like no, but most people have it at a negative. So it's like it's massive to the bottom line, and yet no one's even talking about it. And the customer base is literally countries, states, and
Hey JP, we do want
Fortune 1.
to we do want to be respectful of Dan's time. So
Okay. So I'm
Yeah.
gonna. So look. I'm glad everyone hopping on. Hope this. You know what I mean? Because I love doing these, and you do a great job on Twitter. And just to give you at least some, I thought hit me on Twitter, follow me, good, bad, ugly, whatever, in terms of comments, and hopefully maybe we'll do this after the earnings call. Just to do like a little sort of like post more. You know what I mean? Like analysis.
100%. I will stay in touch. I really appreciate you joining in and echo the points. Anyone down below, make sure you are following Dan Ives. He's been tweeting
Okay.
out a bunch recently, a lot of great Tesla content. I'm not sure if he can hear me, but yeah, make sure you're following him. Appreciate you joining in.
Well, thanks.
awesome.
Thanks again.
Appreciate you coming in and
Yeah,
appreciate you.
thanks to everyone. Happy New Year to everyone, and just great. I really appreciate all the dialogue, and thanks for having me.
Awesome. We still got